If you could identify this chart pattern every single month, you could be making $10,000 per month. If not, $20,000 per month. If not, $50,000 per month, or however much you really realistically want to make. Because the chart pattern is as simple as identifying the direction of the stock market, at a high level, and then part two, dig down to make very, very, very simple trades. So the first part is looking at this chart here. This is SPY, which is the S&P 500 on the weekly chart for the past 1 year specifically. Now, the first question to you, answer this in your head. Where is the stock market going? Is it going up or is it going down? The answer is that it went from an open of January 1st, 2024 of 467 to a price of 6 over here, 0256. It's going up. So from that visual perspective, from a price perspective, it's going up. From a visual perspective, even if you didn't even know the prices, right? Or even if you didn't know anything about stock market trading as a whole anyway, you could see visually, you're like, hey, I don't know what this thing is or what these candlesticks are or whatever this is, but it's going up. A lot of people that look into that want to trade stock market and things of that nature, they generally tend to overcomplicate things, which it shouldn't be the case. It's just where's the thing going and how can you get along with the ride? And on top of that, let's just make an estimation here. If this was last week, like let's just say this is where we were on this specific week. This was 11/25, right? This is what, November 25th. If we had to guess, what color candle would the next week be after 11/25? If it's going up and green means up and red means down, which color candle do you think it'd be? It was green because numbers wise, it's going up. And speaking of numbers, let's actually look at some numbers. Pull this over because I swear you're overthinking this by a lot. Auto zoom this out. Pull this guy back over. All right. So as far as the green candles on the chart from January 1st to today, there's been 32 green weeks, which is about 160 days, 160 trading days specifically. There's been 17 red weeks, which is about 100. It's about 80 days, which is a total of 240 days. So hypothetically, with no strategy at all whatsoever, just blindly clicking your mouse to buy calls, which is to say the market's going up. If you blindly bought calls, you win 66% of the time. That's with no strategy at all. That's with no stop loss at all. That's with no chart analysis at all. That's with no fundamental news analysis. That's with nothing. That's with you getting out of your way and every week just clicking the buy call on a Monday. You win 66% of the time. So with that in mind, right now, if you have a trading strategy and you're losing less than this, you're better off literally cutting as much as possible and just buying calls. And you can increase your win ratio the way I have and my students have that do one-on-one coaching is follow the trend for one, but two, get a strategy that gives you good entries, pre-planned exits, and so on and so forth. That alone gives you an additional plus 10%, takes you to 76%. And there's other things that takes you to 86%. I know it sounds crazy, but it is what it is. Don't believe me? Test the strategy out yourself. I have 1,004 plus people that have done it as well. So get out your own way. So let's specifically talk about this past week of December 2nd specifically. And today, FY, is the 8th. So let's talk about every single day as far as calls that you potentially could have taken for the past week. So for that to happen, let's go to the daily, the chart tab over here. Zoom this over. And I'm not going to go through everything specifically, but I'm going to go through some just general high-level analytics behind the strategy. So we still trade SPY, and keep in mind, if we were looking at this chart, we're only looking for calls in this scenario to be as safe as possible. So if we dig deeper, right, we go ahead and go to the 5-minute chart for SPY, and this is on Monday. This is that Monday that I just passed up during that week. We're making the assumption it's going to be a green week because 66% chance it's going to be a green week, right? So We have 9:30 a.m. CST, draw the little blue line. That's when we walk over here to our computer to draw our major supply zone being the highest point of the day. At this specific point in time, it was still forming, but we have this zone right here between this candle and this candle. I'll go ahead and zoom in a little bit for you. This candle and this candle. We draw the line at 603.46, draw it on down, and we draw the zone. And we draw it over. And if we're looking for calls, we don't even want to take, the piece that goes down, boom, and it falls down. Like, oh, there's an option put. Looks like I made money to the downside. Too complicated. Don't care. Don't want to do it. You can if you want, but I'm crazy. I want simple trades. I want simple money. I don't want all this complicated, nuanced junk. I want simple stuff. So if we go to the 1 minute chart and check this out, because this is where the entries and the exits and so on and so forth go, we have the zone that formed over here. And look, it did work for the put. Came over here, boom, boom, fell on down pretty rapidly, to be honest. And I'm not going to go into that, but yeah, it fell on down. Cool. Then look what happened. Came over, broke above the zone, flew on without us for a little bit, came down, zone candle, reversal candle, confirmation candle, and then entry right on this candle right here as it's forming within the first, 5 seconds or so. You're entering because it was green on this specific point in time. So right there. So boom, you enter, and then it flies on up. Keep in mind, each candle that's like about this size is about a 5% gain. So if you put in $100, you got 5% from that, right? If you put in $1,000, you got 5% from that. So this plus that, we'll just round it to 10%. It looks like it's probably more than that, but again, hypothetically, if you put in $10,000, then you got $1,000 from just being correct about two little nice little candles right here. And it continued to kind of go a little bit higher. You would realistically sell here. That's more than enough. You only need, if you make $1,000 per trade, you probably only need what, two a week to make 8K? Keep that in mind, by the way. So you bought here and it goes up, etc. And look, crazy enough, it came to hit it again and it still continued to kind of move on up. But this is Monday, right? That was Monday's trade. There was way more trades than that, by the way. I'm just going through the simple one. And I know what you're thinking also. Well, it looks like you're only doing this because of hindsight. Test it yourself. If it works, cool. If it doesn't, cool. I was wrong. But I'm telling you, it's not. So the next day, Tuesday, we got the 9:30 a.m. CST line over here. We got our major supply zone at 603.57. Draw it all the way over. And you might be noticing like, oh, see, didn't work. Cool. Knew this thing did not work at all. We also got a major demand zone down here. So we have it 602.46. Came around, came to tap it, and it went up. Have you ever heard the philosophy of buy the dip? Because when you technically buy the dip and you do it the correct way anyway, if it's on an all uptrending week, and if we buy and the price, and let's just keep this in mind, and check this out. If this is where the open is at, if you technically buy anything that's lower than the open and you're expecting the market to close in the green, then you're expecting it to go higher, being higher than this over here. So the fact of it having a major demand zone down here at the 930 mark, coming around, hitting it for a tap, and then bouncing upward is where your potential play is. It's not guaranteed it would go up there, but it was highly likely buying down here below the open would allow you to give favoritism that it would potentially go here, being where all this consolidation is, and potentially a little bit higher to make that profit. So sure, this one's different because it didn't go up, tap on the top, and then bounce up. But I mean, it technically did something better. It went down, tapped it for a lower low than this, going against our philosophy that, generally it's a green week. So it made sense. And let's look at the 1 minute chart, right? 1 minute chart of where that entry is. It came over here. Let's delete this so you can see it. Broke over here, broke below it a little bit, came down, boom, zone candle, reversal, confirmation, entry, right on that where it was green after the first couple seconds, boom, went red a little bit, kind of freaked out, and it worked. This one's not too much to freak out about because, again, it's such a green week. Who cares if it's going to go a little bit against you? Didn't hit our stop losses right here, or optionally right here. It's really up to you. But it up to VWAP, went sideways, continued to literally rush up. And then it tried to do a bounce on here. Nothing was really pretty besides this one here, which I guess would have worked. So, hey, it still would have worked. We had a zone candle reversal confirmation and then an entry piece here. And we didn't really have one here. This doesn't count because it didn't come out of the zone. This doesn't count because zone candle reversal confirmation, no entry above it, so that didn't count. We have technically this guy here, zone candle reversal confirmation here, and then boom, an entry on this specific part. But again, keep in mind, stop loss is either here or here, optionally yours. So if our one that we set is the bottom here, boom, it worked just fine. And keep in mind again, because I'm zoomed out, 2 candles potentially is maybe 10%, if not sometimes more. These look a little bit smaller. They might only be 3%. But if again we entered on this candle here, then if this is 3% and that's 3% and this is almost not only 3, but from here to here 3, so we're at 3, 6, 9. What is this? We'll just say 10, 11, 12, 13, 14, 14%. Pretty nice trade, right? Made some good money. The first sign of red, once it does this, definitely would sell if you don't have a take profit. Now they're getting into take profits on this specific video, but very easy trade. So there was technically the 2. Didn't even know that one was over there personally. So that's that day. And let's go, where are we? So we did Monday, we did Tuesday, we did Wednesday. Now, what about Thursday? Thursday, if we go on and over to this guy, maximize the sell, whoops. Then we have, at this specific point in time, at 9:30, get my circle, we had the major supply zone up here. We had the major demand zone over here at this specific point in time. Finally made a bottoming effect. Did the same thing as before. Boom, over here, right? Keep in mind, this is lower than that. So pretty nice trade overall. Went up, came back to hit it, went up. Came back to hit it, went up. I don't even want to even go into it. I feel like it might be depressing for you just to even look at that. Because if you didn't make this trade, that trade, this trade, whether they're choppy or not, I mean, I would feel bad, unfortunately, right? And then it tried to do a call to the upside on this little guy. And I believe it failed, if I remember correctly. So this is an interesting one. So it worked, but I don't personally like it. I know some students that definitely took it from this, the philosophy of how it was looking, but I just didn't like it personally. But you can see that it went up, tried to reject off of it, which is why I didn't like too many puts for this week specifically, right? So the odds of it working for a put were potentially lower. But these calls down here, as you can see, just the one. I'll just give you a little tease of this one. Look at this zone candle reversal, giant confirmation candle. Went over here, entry. I don't care the size of that reversal candle at all because we knew it was going to continue to work. Just because of how strong that zone is and because it's still lower than the opening over here. So, but the only way this was kind of interesting was that if you still check this out, I want to get too technical on this guy, but this was wedging upward. We had a low. Well, start up here, excuse me. We had a high, a low, a higher low, a higher high, higher low. We'll skip that guy just for simplicity's sake. Boom, boom, and then it continued to fly up. Right? High, low, higher, higher low, and it literally ping ponged here until it broke out, and then boom. If you have the patience to sit through here, great. It's still a fine trade because you can see it as this guy. It's like boom, down, zone candle, reversal, confirmation, and then the entry here. I just don't want to stare at the chart realistically because I'm lazy. From 11:14 a.m. to when did it actually happen? 14:45. I'm not staring at the chart that long. It's too long. And if you want to know like how do you not stare at the chart that long? Well, if you actually had an alarm set, price wise, excuse me, above where this wick was, right? Because you're like, okay, well, once it clearly breaks above this, it's definitely higher than that guy and this guy, so it's definitely something. So that would be an alarm, and then your alarm would go off at this point, and you'd potentially buy at that specific point. Well, not really, but you have to wait until zone candle reversal, giant confirmation. Once it does this, you get alerted. This finishes out for that minute candle. Then you're, of course, buying here. Excuse me, on that guy. But you're alerted here, and then boom, you buy it right then and there. But I don't want to always be by my computer. I've made a lot of money already. I don't really need a lot of money for me to do a lot of this stuff anyway. I just go play basketball and hang out with friends and go jog and try to practice for a marathon and just other random stuff. I don't care about a lot of this money stuff. I'm doing this. Funny enough, you're like, why are you doing these videos? I'm trying to help who's ever watching this channel at the moment. This has nothing to do with me. This is more with my own legacy. A lot of people generally try to help out people after they've already made it, believe it or not. Like there's literally no other piece to it. Um, and that's really all it is to it. And sure, I basically give the full strategy away. We have one-on-one coaching for people that actually need it, but if you don't need it, everything's here. There's over 100, almost 200 videos at this point in time. If you really, really, really wanted to learn it, it's all there. If you need help, I have a team that does it for you. That can help you. Excuse me. That can help you take you across the line, hold your hand so you can actually be successful. This is literally for you. I gain almost nothing from this besides the pride in my heart that I'm actually helping people, which is a big thing for me because everything I have is paid off. My house is paid off. My cars are paid off. I've done everything I've really realistically wanted to do in my life. And I'm only 31. Am I 31? Yeah, 31. 30, 32 in June 5th. So,
If you're looking to become a consistently profitable day trader that makes $10,000 per month, then go ahead and visit mkuniversity.com/info to get started. We provide one-on-one coaching for 2 months, and that way we actually hold your hand and walk you to becoming successful with our specific day trading strategy, which is trading one strategy with one ticker and day trading once per day so you can be successful long term and actually take care of your family. And it doesn't matter where you are, by the way. If you're new to trading or you're an experienced trader already, but you're still just not consistently profitable as a whole, we'll teach you everything from A to Z from the ground up so you can be consistent, so you can be profitable, and more important, you can do the things you want to do, when you want to do them, how you want to do them, and not have to be trading so much. Because the goal when it comes to trading is to get your life back and to get your finances in order so you can do everything you want to do. And by the way, we already have 1,003 video testimonials from people that are already successful using this strategy that you've been learning in this video. So if you want to be the next person, you want to be number 1,004, then go ahead and click the link in the description where it says apply for coaching, and you can go ahead and get started. And now back to the video.
yeah. But nevertheless, let's just move on to Friday. So Friday was finally one of those interesting days. Let's go on over here, maximize the sell, pull this on over, and let's check this out because this one's a nice day. We have a major supply zone up here, 608.50, excuse me, 608.98. And then you can see it came around, did some puts, some nice puts to the downside. I know some students that definitely took it. I wouldn't take it. I'm only looking for calls. It's fine. Um, then we had a major demand zone down here at 608.19. Came around, did not tap to bounce upward, so there was no trade, no calls. This was more of a put day, as you can clearly see. So you can see multiple trades, boom, down, boom, down, boom, down, boom, down. If you play both sides, perfect. Made sense. There was a lot of trades you could potentially do there. And then it came, well, I guess it did actually hit that guy. Didn't even notice that one. Zone, counter reversal, confirmation, boom, entry, and then it went up. So you got your first trade there for a call. Then it went down, hit this zone, hit it right here technically too. Hit it here. Zoom in for you. Below, boom, hit it, fell. Below, boom, hit it, hit it, hit it, fell. Massively fell. Hit it again, broke through a bit. Still zone, counter reversal, confirmation, entry, boom, it fell. It failed. Um, would I have taken any of these trades personally myself? Nope, not at all. Just because I'm going off my own little philosophy of, hey, if it's only potential calls I'm looking for, it's only potential calls I'm looking for. It makes it easier because I can only look for one thing. If you're looking for both things, that's fine, and you'll make money on both days like that. But a day like this, for someone like me, I just wouldn't make any money. And you have to be able to be flexible as well, because you may look at this and say, like, well, what happens when the market's not going up and it's just crashing and it's like 2008 all over again, et cetera, et cetera. Cool. Then you know the market's going down visually, then only look for puts. It's not that complicated. It's like, hey, if the market's been going down for 16 weeks straight, what do you think it's going to do on week 17, 18, 19? 2 out of the 3, it's probably going to continue going down. It's not that complicated. And you may be looking, well, how am I supposed to, technically guess like with this? Because if I did a calls here and calls here and calls here, I would lose a crap ton of money if I was doing calls here. If you're only looking for calls, you probably wouldn't find good quality calls to actually take, so it wouldn't work. But B, if you were on the weekly chart view, you would see something of one chart pattern that's extremely, extremely important that would help you out, which is this is a green day, this is a this is a green week, this is a red week. This is larger than this candle. This is called an engulfing candle. It engulfed the past week visually as a whole, going in an opposite direction, which if you see that anywhere, that generally means that it's turning back against itself. Which, if you want to, you'd be like, cool, that means one of two things. A, and you start looking for puts. Or B, cool, I guess I got some weeks off then until it goes back to calls, which is what I do. So this engulfed it, which is why I had two more red weeks. Then it drastically went down and continued to go back up. And then if you notice, same thing happened over here. This candle engulfed this one, barely so, but it did. And then it went down those 3 weeks. And then you may be looking, okay, wait a second. That technically explains why this was going up. This little small candle, some people might say, hey, it's a doji. It means a change of direction is going to happen. It's going to start rejecting, rejecting, rejecting. Well, it didn't, because this was still, if you reverse it, engulfing that guy. It's still stronger than the one before it. This is not a big, like this candle here is not like that. If it was like that, then we might have that on our hand. There was more selling pressure. There's not enough selling pressure here. So failed here, tried it, almost engulfing, ended small, didn't engulf it, boom, it kept going up. Same thing happened here. Look at this engulfed that on an uptrend. That's really all there is to it. As crazy as it sounds. So if you blindly buy calls, you're going to win 66% of the time. But if you blindly buy calls, but if you buy calls with a strategy in place and you're selective about the quality trades you do, and on top of that, you only take the trades that come to you with the strategy and avoid days that are against your philosophy, you'll make way more money than you could ever want or even need to actually work with. And I almost guarantee, I don't want to guarantee, I don't want to get sued, but I'll say it in a different way. You will make a lot of money if you follow a strategy like this, which is a mix of two things, which are the following: simplicity and common sense.